Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 44,041, up 4.59%. Ethereum 3123, up 10.14%. My goal is to assist you to be more of a financial blessing to yourself and those you love, and also gain real wealth in the process. I've hidden knowledge gems throughout this video. Unless you watch to the end, you'll miss them. See how many you can find. Over the 30 plus years I've been involved in financial markets, I must say Rule 774 is probably one of the most important. Mastering yourself to master the market. It's really hard to master yourself. Markets are full of anxiety and stress. They're also full of disappointment and regret. They're full of just about everything that you can imagine. Markets force you to confront yourself. One particular thing we must confront is who we want to be. Do we want to be just focused on money? Or do we want it all? Do we want purpose and fearlessness, fulfillment and meaning? Courage, patience, inner and outer peace, or do we just want money? Many people think that just getting a lot of money will solve their problems. It doesn't. But having real wealth absolutely does. Rule 18. Patiently apply the 10-5-10 rule. The 10-5-10 rule, if a crypto is trading at 10 and it goes down to 5, you just lost half your money. But if you bought a crypto at 5 and it went to 10, you just doubled your money. This particular rule applies when you use an early warning system and seek to get out of a particular crypto or group of cryptos when they're trading at around 10 and seek to get in when they're trading at around 5. There are really substantial mathematical reasons why this is a good idea. The 10-5-10 rule is known by about 1% of investors and traders, and probably only around 1% of those can actually apply it. It requires a tremendous amount of patience. Warren Buffett is a man that has that patience. At 91 years of age, he has around $100 billion worth of net worth derived from investing. He said successful investing takes 3 things: time, discipline, and patience. I can tell you patience is the most important thing. Without it, discipline and time don't mean too much. So what is patience? Bruce Lee had a suggestion. Patience is not passive. On the contrary, it's concentrated strength. Joyce Meyer agreed with Bruce. Patience is not the ability to wait, but the ability to keep a good attitude while waiting. That takes a lot of strength and a lot of focus, concentration. The most important thing for us is that patience activates the 10-5-10 rule. Turning to KS zone analysis, the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth. Zone 1 is the fear zone. Fear is fear, uncertainty and doubt, FUD, and FOMO, fear of missing out. If you're experiencing high levels of FUD or FOMO, you can pretty reasonably suggest that you may be in Zone 1. But FUD and FOMO also apply to Zone 2. Zone 2 is the blame zone. Zone 3 is the focus of where we want to get to as a community. Of course, Zone 4 is the ultimate zone, but Zone 3 is the patience and rule zone. Patience is really important here. Patience is all about being able to withstand the ups and the downs in the market, and that's not easy to do. It's the ability to wait, to show that courage, that concentrated determination to see things out. It's about probabilistic fearlessness. Probabilistic fearlessness is when you look at a market and you say to yourself, oh, I see things going up, but it doesn't obey my rules for me to get in yet. You have systematic rules which govern when you enter and when you exit. Zone 4 is the meaning zone. It's all about integrity and honor, inner and outer peace, authenticity and fulfillment. Having a lot of money in Zone 3 doesn't count for much if you don't feel worthy or if you don't feel happy. Zone 4 is a critically important zone to reside in. In the last episode, I introduced this new chart, the BTC and ETH market capitalization chart. What this is all about, we can see a line of major structural repair at line 2, a line of minor structural repair at line 3. What we see is we've just overcome normal resistance. This is neither here nor there at the moment. When we start to get above, the price starts to get above line 3, which is above the $1.222 trillion mark, we can see that a degree of structural repair has actually occurred in the crypto market, and it's really safe to get back in, but we do need to keep our eye on things. Now, why do I say that? Why there? Why not? Why don't we just go in now and buy falling knives like we usually do? Many people have reached out to me and said, Ken, what's the change in character here? You're a little bit concerned about things. Yeah, I am, and I'll explain why. Right now, we see a number of problems in the markets, and these are significant problems that a lot of people are downplaying. Alternately, they may not see the severity inherent in them. It is estimated that if the debt ceiling is not raised, the US government will run out of money between the 15th of October and the 3rd of November. This happened actually. The debt ceiling was not raised in 2013. Bitcoin dropped 33.52% during that time. There's also some other headwinds. We can see here this massive sell-off, which we just went through. There's a couple of things that I need to talk to you about here, but one is on September 24th, Evergrande defaulted on its US denominated debt. It did pay some Chinese denominated debt, but it actually was in default of US denominated debt. At the same time that happened, the Chinese government brought in a new crypto law to further tighten loopholes, to remove loopholes that previous bans had not closed. They were all about foreign crypto, banning all ramps to foreign crypto. But they were much more extensive than that. They included actually looking at criminalizing activities if Chinese residents worked for crypto funds, gave technical advice, worked on cryptos themselves, worked at crypto exchanges. This law is far more wide-reaching than many people understand, or looking at realistically. It's a really big problem. At the same time, just one day earlier, the Fed increased its repo to $160 billion per day from $80 billion per day. In March of this year, it was $30 billion per day. Now you may say, oh, Ken, that's just government stuff. I don't care much about that. I'll explain what that actually means a little bit later. What we see here is Evergrande will technically default on its debt if it doesn't pay that US denominated debt on the 24th of October 21. Now, in March 2020, we had the crypto crash. That was brought about by the US liquidity crisis. That crash took nearly 60% off the value of crypto from a specific point in time that I'll discuss very shortly. Let's go first to the March 2020 crash. I want to show you some similarities that I'm picking up in price action. That's why I'm suggesting caution at the moment. We had a very good rally up to March, and then things started to weaken. We had some negative air appearing. I believe we're probably about this zone at the moment. The thing with crashes, they don't happen overnight. It's not as though you get a crash warning and all of a sudden the thing crashes. That's not an early warning system. That's a I got caught by surprise system. What we're seeing here is from around this particular time period in 2020, the price of Bitcoin, this is just Bitcoin, and we know there's a gearing relationship between Bitcoin and alts. Over the next 19 days, until we had capitulation, Bitcoin came down 57%. This was a pretty significant hit inside crypto, but there were warning signs coming down. We saw this violation here. We saw, of course, not being able to maintain or repair structural integrity. We saw a lot of things, as well as looking globally. Now the key, the 10-5-10 rule comes in here. When we notice systemic issues in the markets globally, that just means really significant issues, we can take a proportion of our portfolio, if we wish, of course, if we wish, it's never a compulsory thing, and seek to activate the 10-5-10 rule on capitulation. I'll just give you an idea how it would work in practice. If you were lucky enough to catch this capitulation, and that is what we're looking for, if we catch the capitulation, it definitely came down 57%, but it went up 143% over 56 days. What would you prefer? You could always hold here, just bear the losses and wait for it to recover. No problem at all. That's absolutely fine and reasonable. Or you could make a percentage of your portfolio available for the 10-5-10 rule. Or you could do a lot of different things. It really always depends on your tax situation, your investment horizon, your own personal risk profile. You should just do whatever you feel is appropriate to do. What I'm doing here is just letting you know what the early warning system is sending out. Back in 2013, when the debt ceiling was a problem, what happened here in 2013 to Bitcoin? It literally fell 33.52% in a single day. This is a long tail wick. Now, if we were prepared for this debt ceiling problem and were placing orders down 30%, 20%, 25%, whatever it is that you felt comfortable with, there is an at advantage move that comes into play. Again, it's the 10-5-10 rule. It costs 10, you buy it for 5, it comes back to 10. You've done really well. That's fantastic. In this case, it went down 33.52% and in 15 days came back nearly 70%. If you just held on, it would have been a 12.51% return. That's a no advantage return. I know a lot of people mock people who want to get at advantage returns, but just think about it this way. It's really, really hard to make money. If you can find some way to be more of a financial blessing to yourself and those you love, it's probably really worthwhile. So what are some other potential risks that we're looking at? I've tried to summarize them here for you. If we look at China, there's the property market with Evergrande debt default that's coming in. That will create a big problem across stock markets globally. Because there's so many industries that prop up the Chinese property market, for example, all the building, the iron, the materials, so many different things, and there's so many knock-on effects as well. It's really important to understand when the stock markets tank, crypto tanks first. So when crypto goes down, it can be a hidden warning that the stock markets are weakening. We've seen very draconian laws passed about crypto, confiscating and closing international loopholes. It's now a criminal offense for Chinese nationals to work or be involved in any way, shape or form with crypto. Tether which is a major stable coin, could be depegged or even confiscated. Tether is Hong Kong based, which is part of China. China-based crypto exchange shutdowns and confiscation of funds could also be on the cards. After all, it is an illegal activity as far as the new law is concerned. It's important to understand that China is a one-party system. There is no opposition. So we have definitely a few headwinds there, but what about in the US? The SEC is cracking down on alts as securities. Maybe there's a potential DeFi shutdown, and AML, anti-money laundering, and KYC, know your customer requirements, would be required, and a lengthy registration process if alts do become securities. And many think that this will happen. There's some very hostile crypto legislation provisions in the infrastructure bill. Tapering is set to begin. The Fed has given warning that it's on the radar. Many people say that can't occur. Don't be too sure. It's like everything. As soon as everybody thinks that it's absolutely certain, well, markets don't reward certainty, and we know that. The potential of the US debt ceiling, the default, and the government shutdown is on the cards. Also, major indexes in the US market are currently under resistance. Globally, if we just look at China and the US, they're just typical of what other governments are thinking as well. And there are also hash rate issues to consider. This is just a really quick summarization. There are a lot of things that could cause those spikes downwards to activate the 10-5-10 rule. Remember that we're really positive on crypto. We're not getting out of crypto. We just want to activate those really substantial returns. The other thing behind early warning systems is that they prepare us for buying like institutions. So what do institutions actually do? What are they doing now? Actually, they're doing something that is quite strange and very important to understand. When we look at the repo market, banks are parking literally $1.314 trillion per day with the Fed. Now, why would the Fed accept so much cash? And why do banks have so much cash that they want to park? Is it because they're hoarding the cash? Because they think that there's a systemic failure coming through? The markets are overextended. Things are out of control. Could it be that? Yes, it could well be that. Institutions use the 10-5-10 rule all the time. Okay, so let's look a little bit more deeply at this chart. If we look back here towards 2013, we can see spikes happening. Everything's sort of trundling along and then minimizing, and this big spike. Oh, what was that big spike? That was COVID. What is this? What is this? If you look at the distance from there to there, it's many, many times larger, perhaps 4 times larger as an increment than COVID. This is a little bit concerning. Just like Warren Buffett, the banking system obeys that 10-5-10 rule. They need a lot of dry powder to do it, and they know it's not going to happen overnight. It could take some time, and generally investors are not patient. They just can't withstand it. They end up reinvesting everything just before crashes occur. Another question you might like to ask yourself, why did the Fed need to increase from $30 billion per day up to $80 billion per day to $160 billion per day? Why? Please let me know what you think in the comments. I'm really interested to get your opinion on this. From the Wall Street Journal today, the Fed could be forced to revisit the emergency playbook. That X date that I was talking about, I already put that in, October 15th to November the 4th, and just covered what that actually means. We need to be really aware of this. What we're seeking to do is to use patience to unlock at advantage returns. It's also important to understand that all entries and exits require patience. If you're entering instantly and exiting instantly, that's not requiring patience. It takes a really, really long time to learn patience in markets. I totally understand. It took me years and years and years. We'll be monitoring the X date using Bitcoin compared to the VIX, or the stock market's fear gauge. If we see the fear gauge starting to come out, that may indicate to us that the government may be defaulting. A spike up above here would be not so good. Returning to the market capitalization of Bitcoin and Ethereum, what we're wanting to see is price to get, or market capitalization, to get above this particular $1.222 trillion mark. When it does, we're going to feel far more confident that something is good. But we also need to be aware that that can be short-lived. The thing to bear in mind is the X date for when the earliest time it's predicted that the government will run out of money if the debt ceiling is not lifted is approximately 18 days away. We really need to keep our eye on this. We've also got the China issues playing into all of this space as well. People could look at this chart and say, everything is rosy, Ken, don't worry about anything. And that is a perfectly legitimate position if you would like to take that. Being in the markets for so long, I wouldn't do so. I'm just sitting this one out for a little while. I want to make sure that things repair properly, and if they do repair, I'll be playing it very, very conservatively too, until I get a real sign of strength and technical repair. Please bear in mind, we're still under this minor structural repair line. It is a structural line, so it's really important, but we're still below it. When we get above it, that's something different, but just be aware of that. When we look at investment substitutability, we can see the S&P 500, the proxy for stocks, up 36%. Gold is down 6% for the past year, and Bitcoin is up 311%. Looking at the DXY, the US dollar currency index, and the VIX, the fear gauge, and Bitcoin, we can see Bitcoin is still under resistance. DXY is increasing. Now, why do we say it's under resistance? We can see it with our eye. If we draw a line from that peak to that peak, just with our eye, it would look something like this. That means it's still underneath that resistance. It could well hit this resistance and resume down. We need to watch these levels. Let's have a look at Bitcoin compared to the metals and the inverted DXY. The inverted DXY gives us some comprehension as to where gold and silver may be going. We can see Bitcoin coming down, gold coming down, silver coming down. Also, there's been a little bit of a recovery in copper and platinum. We see a small recovery in palladium. Now, what are these particular charts showing us? Has gold cleared resistance? To know, all we basically do is go across and connect a peak to a peak. We can see a bit of negative air here. This is showing a weakness in gold. It's starting to repair, but it's still below this resistance line. What about silver? If we look at silver and draw again peak to peak, we can still see that silver is also under resistance, but making a play for it. We can see that Bitcoin, gold, and silver are all under resistance. I mentioned before that the US markets were still under resistance. This is what I'm talking about. This is the NASDAQ futures. We're just seeing how it's playing out currently. It's making a play for that resistance. Now, I mentioned in previous videos that there tends to be a synchronization at this particular point in time between the Nasdaq and Bitcoin. What we can see here is a concerted sell-off. This was a quick sell-off, quick recovery. Now, what do we see? A concerted sell-off. What did it do? It came up, it bounced like this is a bounce, and then it resumed back. Maybe we could see some structural repair occurring at around the 14,388 mark. What about this? This was a longer sell-off. We can see that that took longer to repair. Basically, the shorter the sell-off, just like here, the faster the repair. Short, fast, quick, quick, slow, slow, slow. It's almost like dancing. Okay, let's have a look at Bitcoin's technical analysis. We can see Bitcoin is still under resistance. You can see that because this arithmetic and logarithmic resistance line, price is still below it. Price is currently 44,019. We also have a lot of resistance up here between the $49,000 mark and the $52,500. There's a lot of resistance up there. It's very unlikely that Bitcoin would just shoot from this price directly upwards. What we're going to see, I believe, is potentially one of two things. Either a fake out here and a collapse below this confluence of support, or a potential bounce off short term to test this resistance, and then we see what happens. The thing to note is that when we looked at the March 2020 crash, it didn't just fall like a brick, far from it. If we're in fact, this particular position here, which is where I think we are, we could see a rallying of prices, a rejection, and a collapse. Now, if we see a repair over this line, wow, that's different. Let's go for it. But if we don't get those technical indications, I think it's really important to obey the early warning systems. They're there for our protection. And of course, to activate the 10-5-10 rule. It always depends on your risk appetite and what you want to do. Perhaps 42,613 is quite a safe support level for immediate price action if you were thinking of layer buying down and seeking to exit around the resistance. But we don't really have a confirmation of change of trend just yet. It's looking okay, but things are really dicey in the market. There's a lot of things happening. Looking at Ethereum's technicals, Ethereum is currently trading at 31.22. It's done a fairly big rally up, wavered around this resistance, and now it's above that. It has a lot of resistance around the 33.19 mark and quite a substantial amount of support at 29.49. Turning to the KS model, a crypto technical trading model based on institutional price psychology, I'm incredibly bullish about Bitcoin, just seeking to activate the 10-5-10 rule, which of course is really difficult to activate, but it's very, very incredibly profitable to do so. We can see we're in the bull market psychology phase of the current market cycle. We've had a couple of turbulent events for sure. These turbulent events typically take time to play out. We're just keeping our eye on things at the moment. Of course, if you feel super bullish and you think, yeah, buy the dip, go for it. Absolutely, if that is your strategy, go for it. It really comes down to personal opinion and what is right for you. I just share my experience over so many years. It took me a long time to get to this position where I could basically step away from the market and say, okay, market, do what you're going to do and let me see what price reveals to me. It's not easy to do. Turning to fear and greed, we can see the fear in the market is increasing currently. Rule 109, enhance pattern recognition. Let's have a look at the top 8 cryptos. What do we see here? Bitcoin is under resistance. What about ETH? ETH is also under resistance. It's going for this 31.97 line again. Let's see how it goes. What we see is Bitcoin is again trying to take out the 44.264 mark. It's getting there. What do we see with ADA? ADA has been rejected. You see the different kind of pattern playing out here. It got all the way to that line. Just notice the particular crosshair I've got on ADA right now and look across to the other charts. Bitcoin, Ethereum, Binance Coin, XRP, Doge, DOT, and Sol. ADA Cardano is showing a great degree of power, but we can also see that it's backed off from that price. That $2.34 level is still creating a problem for ADA at the moment, but we also see that there is a degree of upward support here. Let's see what happens. It's always a wait and watch. We can see Binance Coin still under resistance. XRP is starting to get over that resistance. We've still got this upward support at 10415. We can see Doge. It has resistance at 2316. It's currently 2072. It's showing a degree of weakness, although it's starting to consolidate above this resistance line. We know that all of these alts get their power from Bitcoin, so we need to keep an eye on Bitcoin, and we know that's under resistance just now. When it gets above resistance, when Bitcoin gets above resistance and it turns this to support, that's a different issue. We can see DOT. What's happening with DOT? It's under resistance, just like all the other top 8. Sol is just almost near, it's just about there, but just a little bit under. We can see that 152.69 is important in terms of structural repair. Don't forget that we can actually look at short-term positions in amongst all this chaos that's actually out there at the moment. It's a really interesting point that when the market direction is consolidated, for example, it's bear, it's bull, whatever it is, it's consolidation, that creates enormous trading opportunities. However, when things are changing from one thing to another, or there are a lot of threats, we often have to risk off at structural uncertainty. Turning to the Bitcoin stablecoin supply ratio SSR oscillator, we can see stablecoins flowing into the market, but not so much flowing into Bitcoin. We're seeing a decreasing here. Let's see what happens with that. We know that there's a strong correlation between price and futures open interest across all exchanges. We can see total open interest, well, futures open interest across all exchanges is about 13.075 billion. We can see an uptick in price here. We would assume that the futures open interest is actually more. Let's check it out. So the real-time open interest is 13.72 billion. Across the past 24 hours, there's been around 349 million in liquidations across 86,307 trading positions. We can see that uptick in price is because around 70% of liquidations were short, but we notice this volume is incredibly light. Higher volume tends to confirm a trend change or a continuance in the trend. We've been keeping our eye on USDT in the futures market for quite some, well, actually months. The open interest is around 89 million. And if we look at the traditional futures, we can see it's not much. There's no stress being recorded on USDT at the current time, but please bear in mind that could change very, very quickly. Turning to options analysis, for options expiring at the end of next month, we see total open interest 24,170, the put call ratio 0.44, the max pain price 45 $1,000 for Bitcoin. Let's quickly analyze Ethereum options. We can see for options expiring at the end of October, total open interest 169,032, put call ratio 0.49, max paying $3,000. This is the point at which most options expire worthless. Turning to CoinMarketCap, there's currently 12,164 cryptos in the crypto market. That's a lot. When we see the top performers, or the top cryptos by market cap, they are Bitcoin, Ethereum, Cardano, Tether, Binance Coin, XRP, Solana, USD Coin, Polkadot, Doge, and AVAX. Let's have a look at the greatest gainers over the past 24 hours. Perp, Uni, Sushi, XDC, CRV, Ren, Mina, XEC, Comp, and Aave. Let's look at the greatest gainers over the past 7 days. Seller, XDC, Ren, Perp, Luna, One, Tezos, Axie Infinity, Uni, and Cello. Let's have a look at the greatest losses over the past 24 hours. Huobi Token, HT, of course, they're actually shutting China registration for local Chinese citizens. Seller, Tezos, Mana, Engine, Bitcoin SV, Rev, Maker, Leo, and stablecoins. What about the greatest losses over the past 7 days? Huobi Token, down 45.93%. This gives you an understanding as to how these tokens can get hit. It's really good to understand this. Filecoin, Audio, Near, BSV, IOTA, Rev, Flow, ICP, and Rune. Looking at Binance derivatives, 24-hour trading volume, 69.6 billion, 8.1 billion in 24-hour open interest. In looking at the change of the price in the derivatives contract for the past 24 hours, Bitcoin up 4.4%, Ethereum 10.1%. What this basically means is that the interest in pushing the price up goes with the positivity of the actual change in the price of the contract. We can see there's much more interest in pushing Ethereum up rather than Bitcoin. Let's go down and have a look at the top gainers. DYDX, Uni, Sushi, 1inch, CRV, Ren, Comp, Aave, Bake, Dodo, and Mask, all above 10%. Let's go the other way. Only one, IOTX, at negative 10.9%. When people first get into crypto, they just want to get in. They don't want any money sitting on the sidelines waiting. It's a really hard thing to do, to actually put patience in. What I've said here on this line of minor structural repair, if above, go long, if below, patience. Patience is really, really vital in anything you do. Perhaps think about it like this. How long does it take you to get a uni degree? Can you just get it in a day? Probably not. What about learning how to drive a car or drive a bike or ride a bike or anything in life? It takes time, but yet many people enter the stock market, crypto markets, forex trading, and they think they're going to be a millionaire overnight because they see that there are many success stories out there, but sometimes those successes come after many years of utter failure. It's really vital to develop a sense of patience. You can see crypto going up and down wildly here. This is the nature of crypto. Over the years, I've learned through literally a lot of losses that when there is structural uncertainty, it's good to go and have a bit of cash on the side. Of course, it really depends on your tax situation and risk profile and so many different things, how much cash you want. But just bear in mind that the debt ceiling increase has not been approved. The government may run out of money in 18 days and be in technical default. That is a problem. We're also seeing cracks. Evergrande actually defaulted, not technically, but it did default on its foreign US denominated debt. It's been given 30 days to catch up before it is actually considered in technical default, but it's really important to understand this was just literally nothing. $83 million is totally nothing for Evergrande to come up with, but it missed that bond payment. This is a sign of the times. There's a lot of other data out there that points to really big problems on the horizon for the Chinese economic system. So we basically got crypto exchanges being shut down, enforcement on Chinese nationals working internationally in anything related to crypto. And we know the Chinese people have been so inventive in the crypto space. They were literally one of the earliest adopters because they had government backing. Of course, it makes a lot of sense. Now what's happening? That's now a criminal activity in their country. We could be seeing some really large turbulence occurring. We just have to keep our eye on it. But of course it could go the other way. If we find that we're getting technical repair here, we could go in tentatively, but with a full understanding of what could happen. You can see just how quickly things can turn south in crypto by this really large fall. It's the nature of crypto to move around so wildly. That's why the 10-5-10 rule is so valuable. With the 10-5-10, you expect this, so you actually put your buy orders down really low, ridiculously low sometimes, as low as you can go, and just wait for it. But that requires that you actually have cash to do that. Hence the early warning system. When there are upcoming events that could cause a particular problem to crypto, we want to take advantage of those. We're not scared of them, we look for them. It's the absolute best time to profit in any market. We're not, I think this is really important, we're not concerned about them. We're concerned about missing out on the opportunity to benefit from them. It's a very different thing. The issue is if and when it does happen, because this stuff is happening all the time, but if and when things like this occur, if you don't have any spare cash, you'll probably say, oh, I wish I had spare cash to buy this dip. It would be so good. That's why it's really important to have different rules to govern when you get in and get out of different things. For example, an entry rule would be when price passes across this particular level, I'm interested. Because you know that both Bitcoin and Ethereum structurally have overcome their own resistances. That is a really good sign. But then you would want to monitor it relatively closely because of these potential problems springing up in the market. Rain, hail or shine, crypto is definitely the best industry in the world to be in. We're only seeking to take advantage of this volatility and profit from it. That is realistically what the early warning system is about. If you just keep your eyes on these particular technical levels, when things overcome resistance, come back, consolidate and resume, that's a very, very good entry. But always bear in mind the context of the market that you're operating in and any key events. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from, and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.